Okie dokie, Heidi ho everyone, and welcome aboard. It is Sunday Market Update, and as usual, we'll be going part way around the world to some of the traders that are posted all over the world, as you know, in the Actions to Wealth family. Before we do that, and first up, we'll be going to Brighton in England to say hello to Ash in a minute before he goes on a death-defying stunt up in the I-360. But it's going to be just an ordinary week coming up, Ash. I think there's like a tenuous situation in Ukraine. The stock market's under pressure. New COVID strains all over the place. In record numbers. The RBA statement, BOE statement, ECB statement, and then we get to Friday where there's the non-farm employment change. Bit of a quiet week ahead, eh?
Well, yeah, and you have to throw in the Boris Johnson aspect as well. I mean, I know it seems like that. Yeah, sounds like that story's gone away, but it really hasn't. It's very much front and centre, where we got this Partygate situation going on. You know, did he have an illegal party? And it's it sounds really innocuous, but it's just another thing that Boris Johnson's done where he's kind of almost acted outside, like he's outside of the law, and people don't like that. So inevitably, the political vultures are circling within his own party and the other opposition parties as well. So that may play a factor. I mean, certainly for the pound, that may play a factor, and subsequently the FTSE as well. So there's things, mate. You're right,
though, isn't he? I mean, if anybody can survive it, he can probably.
Yeah,
Bit of a bulldog, isn't he? Looks like one. I mean, I shouldn't say that.
Do you know what? I don't know what animal to compare him to, because probably something with really oily feathers, because the water just does not stick. You know, things just run off him. And I don't know if he just doesn't care, or whether it's just that his personality is so much bigger than the problem that he can dodge all this stuff. I would have thought it's going to get him eventually, but you think back in history, Donald Trump. He was never impeached, and you and I were saying right from the day he got voted in, he won't last long. He lasted.
I thought he'd get shot, mate. Much less impeached.
Yeah. I mean, they might get him eventually. But yeah, I know you remember you saying that. Berlusconi, you remember Berlusconi?
Yeah, totally.
Things just didn't stick to him,
Italian.
Yeah, so he may well survive it. I don't know, but the point is the story continues, and it may just blow up out of nowhere. You just don't know with Boris Johnson. It's going to be quiet, and then everything will just happen at once. So it will be it's
in the mix for the week anyway. We'll put it that way. It's something to think about. What else do we have to think about from the big guys, the big traders? What are they looking at this week?
Well, we're actually going to focus on the FTSE today, which I think is kind of cool. So let me share my screen, and I will show you what the charts are doing, because the FTSE is in one of those periods that can really run people down. And I've seen this period time and time again. And what tends to happen, you never know what's going to happen in the stock market, but what tends to happen is it holds on and it continues to push higher. And we do get these kind of, big volatile moments that just manage to push people out, but it tends to hold on. Now you can see this is last week's bar. And it got low. We see that the price action of last week, it collapsed to the downside, looked like it was going to collapse completely, made a beautiful hold. And not only did it hold there, and what can happen at these levels is it just bubbles along in this area, but that didn't happen. It bounced and it bounced and it bounced and it bounced. And even Friday, even though it's a little bit negative, Friday, if you look at where the price action ended up, it ended up looking positive again. So the FTSE is having one of those periods where people are getting freaked out, but the dip buyers are very much in play, and they are just taking advantage of the fact that there are opportunities to buy the dip. Now, if we look at where this could go, I still think the FTSE's got a really good shout. And this is it's a difficult area because it's got a lot of tails, but you can see closing here, a tail there, and a tail just a little bit lower. So we're looking at around about another looks like 200 points, so about another 3%. About another 3% up on the FTSE 100 is where I would look before I'd be too concerned about downside. Now, with the FTSE, you have to look at the market itself, but also the kind of macro picture. And the macro picture usually falls very firmly in the United States door. The Nasdaq has been one of those markets that has spooked people sufficiently to potentially be closing up positions. But look what happened on Friday. In fact, look what happened last week at the end of the week. Here's the neckline of the inverted head and of the head and shoulders. There's your left shoulder there. There's the head there. So this is what we got. I don't like to delay too much by drawing on the screen, but just so people are clear, there's the left shoulder. There's the head. Now I've been talking about it coming up and making a right shoulder before collapse, and the Nasdaq still looks likely that that's going to happen. Now, why is this important? Well, this is important because if the United States sneezes, the rest of the world gets a cold, and the FTSE will be one of those ones that does the same thing. So I think that the fact that the Nasdaq has managed to hold on, the price action was below the neckline, but it's managed to push its way back inside. That would suggest some upside positive for the FTSE. You look at the S&P, very, very similar looking to the Nasdaq. It's got this little trend line going along here, which may well prove to be too much of a breach. Trend line may well be there. So difficult to know exactly where it is, but if we'll probably need to use this line just to kind of stay in touch with the Nasdaq of what we saw with the Nasdaq. And the same thing anyway, decent bar from last week's price action, and a bar like this is significant because the sellers really have had a good shout of trying to push this lower, and it wasn't able to do so. Jerome Powell came out and said, look, we are hawkish, effectively, just to kind of paraphrase, we are hawkish, which means that we are now going to be aggressively raising interest rates and potentially tapering and everything else. So if it's time to get out the stock market, the signal that the rhetoric is now in place. But the S&P managed to hold on and create a really nice looking bar after all that information was disclosed. So again, positive for the FTSE. So next week, I'm looking to be buying up with the FTSE, and we'd have to break down the bars here, but you can see that that there's a little trend line along here that didn't quite get to touch. But if it comes back down, this is the buying opportunity. It might come back down again and make an equal low, touch the trend line and go. It may not do that, and it may just open up straight away and just attempt to get through the upper line instead. So breaks above 74.72, I'm looking for upside. It breaks to the downside, I'm looking for upside. So either way, I am looking for longs on the FTSE 100. The Bank of England are out next week. As you said, we got a plethora of releases and data next week. The Bank of England are out next week, and they're going to be talking about something similar to Jerome Powell. If they come out with a very, very hawkish statement, questions are going to be asked. FTSE 100 companies pay a dividend yield, the higher companies pay a dividend yield of around about 3 to 3.5%. When you start raising interest rates, the free cash rate increases, or the risk-free cash rate increases. That means that if a bank pays you 2%, why are you putting money into the stock market to get another 1.5%? And many people will say, well, there's no point in doing that. So turbulence could happen at any time, mate. The Bank of England could change things. As you said, Russia could change things. And all I'm saying is, from what we know at this stage now, the FTSE is going long. But things can change very, very quickly. So you have to be very, very aware of that as well. But so far... Of course...
Yeah. Sorry, mate. You go.
No, I was going to say, so far we're looking at longs.
Yep. Okay. And of course, tomorrow being the 31st of the 1st, adds another little bit of flavour into the mix. Is that going to affect you?
Well, in as much that there might be a pickup in a bit of volatility as some fund managers, balance up their month, then yes, it could add some volatility. But what that should create actually is an opportunity. So, hopefully what it will do is drive the price lower to start with, and then we can start getting on board with some upside. So yeah, you got to be extra cautious. I'd agree with you on that. You got to be extra cautious. I think just buying in without a decent signal would be dangerous tomorrow. But I think if we go with the overall idea, or I'll be going in with the overall idea that that I'm going to be going long on the FTSE, it kind of makes a lot of the decisions a bit easier. You know what I'm actually looking for.
Cool. As Paul P points out, it's kind of a Monday, kind of Sunday, isn't it? We've got all the Monday show in today, the trading buddies all together today. So let's do it all again tomorrow, shall we?
Yeah, let's do it, mate. Yeah, I'll see you in the morning. And I'll see you in the morning, Paul P, hopefully.
Enjoy your i360, mate. Have fun.
I will, yeah. I'll wave at you.
Okay. From a very high place over Brighton in England, it's now time to turn our attention to South Africa, where we now go to Johannesburg, and it's a recording this week of our good friend George, who's also a member of the Monday Trading Buddies team. See you tomorrow, mate.
See you tomorrow, guys. Bye-bye.
G'day to George.
Hi guys, my name is George Nyabadza. For those who don't know me, just going to talk to you briefly about what we discussed during my show, which is Wednesdays and GMT time. Remember, GMT is not always London time because of all the time changes. So GMT 9:30 to 10:15. My local time in South Africa, that would be 11:30 to 12:15. So briefly, two very important things that we focus on: price action. Now we are price action traders, and the only things that we have on our charts is the 10 EMA and the 20 EMA. 10 EMA we used to indicate the breakout part of any trend, and 20 EMA, that's when you're trading for our pullbacks. So the 20 EMA, we trade off the 5-minute chart, but we use the daily time frame to find the areas where we want to jump into trade. Now, for those who have followed the show, you would have known that I use a lot of measured moves, areas where price is likely to react, bounce, break out, whatever the case may be, to show me potential areas to jump into the trade. My primary wealth extraction strategy is what I call the ARA 2.3 reversal into 2 to 3 days of a trend. So something like that would have been a perfect setup to go find entries on the 5-minute time frame and see if we can ride it as far as we can and extract as much wealth as we can. That also could have been a good point. So we want to jump into a trade here and take out as much as we can of wealth from the market as far as we can. If we don't get it there, well, there'll be pullbacks to trade along the way. Another favorite chart of mine is S&P 500. That was the euro versus the dollar. And if you ever look at where we are now, I mean, just look at the chart, trading range area here. I spoke about the market trying to break out to a new high towards the end of last year and kind of failed to do that. Now we've broken beneath that trading range and entered into a trading range. There's a lot of information from this measured move tool that we use. So we are in a trading range. What I'm looking for example, is an attempt to break out of that short trading range, somewhere within here. Look for my ARA 2.3 strategy and trade it down. So in terms of how we trade, price action is one part of it. The other part of extracting wealth from the market is money management. Now, money management is not just saying I risk 1%, let me break it into 2 parts, and then let's see where I take my profits out. But money management goes a little bit deeper. You have equity that you start off with, and you know how much of that equity you want to risk, okay, 1%, 2%, etc. But then at some point, you need to determine when are you going to go beyond 2%? When are you going to go to 3% or 4% on the total equity? Okay, managing your risk so that at any given point in time, if you are stopped out, you never lose more than what you initially set as your comfort level, 1 or 2%. That's on the total equity. The other part of it, of course, is when you are in a trade on that very day, when that initial 1% is now 2%? How do you go from that so that on the next trade, on the day, on the same chart, you now put in 3%? Because if you lose on that 3% minus 3, you've already banked 2%. So it's still within minus 1%. And if you manage it and the day is going your way, which it always does, 100% of the times, Geoff's going to laugh at this, I'm always right 100% of the times because of the strategies that I use, which ensure that at any given time, the hat I'm wearing tells me whatever I'm doing, there's a 60% chance of success. So I'm 100% right 60% of the times. And once I know that, then if I've banked 2%, happy to put 3% in. If I minus 3 on that trade, I still only minus 1, and I can keep going ahead. If I've banked 3% and manage it with my stop loss, I'm comfortable with money management to go and risk 4% or even 5% on a trade. If I lose on that on the day, I'm just out minus 2%. So guys, this is what we talk about. I'm out at a resort, so enjoy the greenery. But we will catch up on my shows, live trading profits, which are every Wednesday, GMT time, 9:30 to 10:15. Anyway, I'm gonna go enjoy the resort. And by the way, 29th Jan, it's my birthday.
Happy birthday to George from yesterday. Of course, it was the 29th yesterday, and I think he turned 40, just 40-ish, thereabouts anyway. 100% right 60% of the time. I love that expression. I love that expression from George. And I pulled him up on it. He got it wrong last week. Not the calculation, but he expressed it in the wrong fashion. He got his tongue tied around it a little bit, and that's why he was referring to me laughing at him. Don't laugh at George. He's a great guy and can trade his bum off. I can tell you that. Okay, my look at the world this week, as usual, starts with the weekly charts, and I have identified 1, 2, 3, 4, 5, 6 potential game changer bars. That's a daily chart. Let's look at the weekly. The first of them is Euro Swissy. Now, I'm going to speed through these because they're very, very similar. I'm not going to trade any single one of them as on their own bar, if you like. I'm not going to trade the bar at all. Instead, I'll wait and see what happens at their various junctions with support and resistance. And at this point, I can't see why I'd want to jump into Euro Swissy. Yes, I can see a game changer bar there. Has come off its high, however, and I don't think there's too much reward. This looks to be very rangy to me, and I don't see a way to break out of that right now. So that one's a no for me for now. Not a massive fan of the euro anyway, and if the market is feeling a little bit tenuous, risk-offish, let's say, then I think we'll see a bit of strength come into the Swissy as well. So I'm not a massive fan of jumping into that one straight away. Euro pound is in, if we look at the monthly chart, is at a strong support level. I don't think there's any question about that one. The weekly chart is giving us, however, a big game changer bar to the downside. Couldn't possibly trade at this level because of what I've just shown you. We're bang on that support, a big move there back in 2019, about 3 years ago now. January 2019, it took off. I can't see this going straight through that level. So again, that's a no for me for now. However, if price were to come back up here, then we might have another crack at it at some stage, but it's a no for me right now. Pound CAD is the next on the weekly chart. Again, giving us a game changer bar. Has come off its high again. So this is probably the best of them if you are wanting to trade a game changer bar, because it has got a nice little rejection of the monthly pivot, which has got 1 day remaining in its life. So therefore I can probably see double bottom sitting here off a base. There's no question. High. Is this the high or low? Maybe it is. Don't like the fact that it's come off its high, but I will be looking at this one pretty closely. And again, it's a bit tough for me to be going against the Canadian dollar. I say this a lot. recently. There's good numbers on the Canadian dollar. Oil's at all-time high, not all-time high, but it's getting up there towards the 87 mark. I think it is around about there at the moment, or something of that nature. So I can not really get a great love affair with this one either, but I think technically it is the best of the game change bars. Pound CAD. Pound Swissy is next. Not too bad, coming off a support level. And for those of you who love inverted head and shoulders, there's one sitting there right now. Not for me really to trade off the bottom of that right shoulder, but should we get a pullback and a higher low, that would make sense to me to trade this long. A little bit of resistance in a confluence there at the top of that neckline, I'll call it. So you'd want to be careful of that one as well. But yeah, pullback required before I'd go long there. And we've got two more. Dollar yen is one. I don't like this currency pair to trade at all, but it'd be a game changer bar. There's no way I would trade that bar at that point. You're trading straight into the high, and it's a big bar as well. So if you fancy that at all, again, you'd be looking for a pullback before you traded it. And dollar sing, not quite as bad in terms of trading into resistance, but there is a horizontal level there, and it is a massive bar. So again, pullback required before I would look at trading that long. It does look, however, like there may well be more than a hint of a false break of that trade line. So pullback here makes sense to trade it long at some stage, just not yet. My watch list and preferred trading pairs this week will be Australian dollar versus the US dollar. Now, Australian dollar, and I'm only talking here from a technical point of view, because fundamentally it's difficult to get in love with the Aussie at the moment. However, there is on Tuesday an RBA statement, and the Aussie numbers that have come out recently might suggest to the RBA that it's time to change their rhetoric around not changing interest rates till 2024. So if that's said in the statement that let's say next year or later this year, the RBA looks at raising their interest rates, then I can definitely see a rally on this pair. I'm not trading it right now, of course, but any sign that this is going to rally, there is a nice little double bottom sitting there. Any sign it's going to rally up here and give us a higher low in this vicinity, I would like to trade that long. You're going to trade into resistance, there's no question, but so you would need to be taking profit before these levels. But I think Aussie dollar is certainly one I'll be watching this week. If I can sneak an entry in before the RBA and get free trading, that would be absolutely ideal. Aussie dollar long, but watch it. It's not a jump in yet scenario. CAD Swiss is the next. There are three of these that I am following this week. CAD Swiss is a little bit, if I look at this chart, I can totally see that we've been in a long-term downtrend. Then I look at the base that we've come off and the failure of this to get through resistance. And now we're putting in a lower low and a lower high and another lower low perhaps on the monthly chart. Maybe it's an equal low. I like that we've come back under this resistance area. Strong resistance through here at the 73, 75 mark, have come off a resistance trend line, triple top sitting there, lower low, lower high, lower low, lower high. The trick here would have been, and I think we mentioned this last week in Trading Buddies, we did have a nice tweezer top sitting there, but the monthly pivot was dead ahead and very, very difficult to trade that. Had you done so, you'd be in a bit of pain at the moment, but not out of the trade. I'm still looking to get into this, but I would love to do it as a false break of resistance. So I'd like to see price get up here, fail again at this level, get underneath the trade line, and then retest it. That's my cue to go short. So that's what I'll be looking for on CAD Swissy. The last one from me this week is pound yen. Now, the monthly chart should suggest to you, as it does to me, that this is a very strong resistance level. We have banged our head on this quite a few times. When it broke, but price comes straight back to it, goes into consolidation, bangs off it again, and goes into consolidation at this very level. Now, I'm not convinced that we're going to break out of that range that I just showed you. Sorry, I did the wrong thing there. There we go. I'm not convinced that we're going to break out of this range anytime soon, but I've already got 2 false breaks at that level on the weekly chart. Suggests to me that a lower high in here does bring us back down to the bottom of that range. So that's definitely one I'll be looking for. And we may even have it already on the daily chart. We go a little bit tighter on that. You can see that we've come back into the range. We've hit the monthly pivot, bounced off it, and now we're at the weekly pivot. There are worse trades to take on this planet, I can assure you, than trading that bar there short. Now, caveat around that would be, of course, Mondays, we tend to get gaps in the market. That could upset this scenario. If we don't get a gap in the market, I would most definitely be looking to trade short underneath this bar, say maybe 3 pips underneath it. Put my stop loss. The weekly pivot won't be there, of course, but I would reserve my judgment as to where the stop loss will go exactly, but certainly be above that candle, no question. And definitely taking profit at the monthly pivot or just above the monthly pivot and seeing if this can indeed go down to the bottom of that range. It'd be a nice little reward to risk if you can get into that and it does work. And at this point in time, that's probably my trade of the week. But like I said, gaps can do funny things over the weekend, and that may not be as good as it looks when we wake up tomorrow for a new market. All right, guys, thank you so much for your company for another Sunday market update. Thank you to Ash and George, and thank you to Mai, of course, for getting that recording up. It was a little bit touch and go whether we get George on screen here today, given some technical issues that we were having, but we did. Have a wonderful week ahead, guys. Don't forget there's lots of news coming up this week. Keep your eye on those if you're trading the smaller time frames in particular, and keep your eye on Trading Buddies tomorrow. We'll be on here from 2:55, 3:55. 3:55, Singapore and Hong Kong. Have a wonderful time. And those of you that we won't see tomorrow, Gong Hei Fat Cho, and have a wonderful Chinese New Year. Bye-bye.